or California, I'm sorry, and an MS in Information Resource Management from the Air Force Institute of Technology, and over 23 years of experience studying the markets. She's Vice President and Senior Technical Analyst at DecisionPoint.com, along with her father, Carl Swenlin. She launched DecisionPoint Daily Blog in 2009 along Carl. She serves as consulting technical analyst and blog contributor at StockCharts.com. Erin is an active member of the CMT Association. Ladies and gentlemen, here to present simple indicators to improve your entries and exits is Erin Swenlin of DecisionPoint.com. Welcome back to Traders Corner, Erin.
Hey, thank you so much. It's my pleasure to be here. Let me make sure everybody can hear me. It looks like you can.
Loud and clear. We got your screen up, and it's always a pleasure to have you.
Okay, so today I'm going to be discussing how you can improve your entries and exits for longs and shorts on stocks. I don't do options, so Melissa's information was very interesting to me, but not something that I do. So I'm going to switch gears a little bit here, and we'll look at stock selection. So here are just a few pieces of information. We've already talked about me, so we can flip through this. I don't need to talk about myself anymore. Okay, so I'm going to talk to you a little bit about what I call a life cycle of a decision point trade. So this is pretty much how we run things when we choose our stocks. So first of all, we always start off with big picture analysis, meaning we need to know what's going on in the market. Our DP alert is just fantastic to give you that kind of information. We study the SPY, we look at all of the indicators for it, but we also study Bitcoin and yields and bonds and gold miners. All of that is included in our DP alert. So we feel that's the cornerstone. You have to know what's going on in the market because you need to ride that tide. We do sector and industry group analysis next. So once I've looked at what's going on in the market, I pick out some sectors that look interesting to me, and then I go in and look at the industry groups within those sectors to see which ones really are showing the most strength and momentum. Then I run my scans. I have a number of scans. We're actually in the process of putting together a scan alert system where you would get all of my scan results unfiltered in a service, which should launch hopefully soon. And, you know, a lot of those scans come up with some real winners. And that's really what I want to do, is find those stocks that will ride the tide, as I was saying earlier. Once you get all those results, like I said, the scan service will be for the do-it-yourselfer. You can sift through the scans, or you can become a DecisionPoint Diamond subscriber, and I do all of the sifting for you, and I give you 10 stock picks per week. So you make your pick, and then you have to time that entry and exit. And I think that is important because you can get yourself an extra 1 or 2% if you just happen to time it right on the right day. Determine your target and your stop. So once I'm in a stock, I find it to be really a necessity to come up with a target and a stop. Just getting in and just sort of riding around and just trying to figure out, well, I like it, it's going up, and not paying enough attention to it. You know, you don't have to pay strict attention with most brokerages. You can set those targets and stops, go on your summer vacation. And if you're not on summer vacation, at least you know that if you're distracted, if something happens, you're going to be set. You're going to get out when you need to get out, and you will get out when you should get out as far as the upside as well. So which charts do you follow? I look at long-term investing as monthly charts to weekly charts to daily charts. So you have to start with a much bigger picture when you're long-term investing. Intermediate term investing, I'm looking at weekly charts to daily charts. And short-term trading, I call it, are daily charts to minute charts. And then of course there's the day traders. I don't do day trading, but you can use the minute charts. You can use this technique to do day trading as well. It's just not something that I do. And that's because you time your entries using those minute charts. I use a 5-minute bar chart myself, candlestick, I'm sorry. The important indicators, the indicators you're going to see on all of my charts are all available through, I know stockcharts.com has all of these indicators. I believe our price momentum oscillator is now on Thinkorswim. I think it's on most major charting platforms at this point. The price momentum oscillator is very much like the MACD and the PPO in particular. If you were to map them on a chart, they would look almost the same, which is fine by us because what it really is good for are divergences, and catching those negative and positive divergences tends to not be quite as twitchy. I really trust my PMO and can't recommend it enough. Relative strength index, of course, the RSI. I need to know whether the price is overbought or oversold. Price. On balance volume, that gives me my volume piece. It's an easy indicator to understand. I don't think you have to get complicated with your charts. I just don't believe that you need more than what I'm going to show you on your chart. And of course, everybody has their favorite indicators, and these are mine. Stochastics, this is my condition indicator. It tells me the condition of that stock. Is it in a bullish condition? Is stochastics rising? Are they above 80? So you know internal strength is there. Really, it's just a great indicator for internal strength and internal weakness. Relative strength analysis. So relative strength index is not the same as relative strength analysis. The relative strength analysis is comparing the industry group to the S&P, comparing the stock to the S&P, and then my important piece is comparing the stock to its industry group, so that not only have you picked a strong sector and industry group, you want to find the strongest stocks within that group. And one of the ways you can do that is by measuring relative strength of the stock against its industry group. So all of those things are on my chart. I'm going through this because as soon as I'm done with this, I'm going to be ready. I want to take your symbol requests. We'll look at it and apply all of this that I'm going to show you right now in a trading room. All right, so here you go. There's RSI at the top. Like I said, it tells me whether price is overbought or oversold based on where it's located. If it's above 70, that means that it is overbought, and you need to be careful because price has risen too much too fast usually. Or you're looking at a winner that might keep on winning. That's why you keep looking down the chart. Here we had a double bottom, so I always look at price, of course. I'm always looking for chart patterns. I don't know, over time, I've just loved chart patterns so much. I feel like I look at a chart and I can immediately see the patterns that are developing within it. You do this long enough and that's exactly what'll happen. There's my PMO. You can see that this measures the momentum. The signal line is red. Right here, we had a PMO buy signal come in. The stochastic, there's your OBV. You can see that when the tops are falling, that's confirming a downtrend. When they're rising, that confirms an uptrend. Now, if per chance, like what back here, what you had was an OBV bottom here and then an OBV bottom here. Notice these were rising bottoms and these were declining bottoms. So that actually was a positive OBV divergence that actually should have led into a more extended rally. You did get a little rally out of it, but not as much as I would have expected. But that's why you have all the indicators on the chart. Stochastics, as I said, what I'm looking for are rising stochastics, but in particular, I want my stochastics to be above 80. And a lot of people are like, well, that's kind of overbought. Well, I don't look at stochastics as overbought and oversold. I look at stochastics as a measure of internal strength. And you want stochastics to be high. You want them to be at least over 50 in positive territory. So we're looking for internal strength, and stochastics is a great measure of that. The other reason I like to add stochastics is that they tend to be more sensitive. in regards to different than my PMO. My PMO obviously doesn't twitch like stochastics, but the nice thing about stochastics measuring that internal strength is you get that additional information. So you want stochastics over 80, that means you have a lot of internal strength. If they're below 20 or falling, that generally means something bad is about to happen or is going on. Here's the relative strength that I was talking about. Here's the relative strength of the industry group to the S&P, and you can see that's rising, so that's a check mark. The relative strength of the stock to the SPY is rising, so that's a check mark. And then, like I said, this is what I really want to look at. Relative strength of the stock to the industry group. Notice that the relative strength line is rising. That means that this particular stock is relatively more strong than the rest of those within the group. So that's why we're looking at relative strength of the stock to the industry group. Like I said, I don't like to get too complicated. I don't think it needs to get too complicated. I'm a pretty successful trader, and I use the same indicators. They're very simple. I have the same thresholds for my entries and exits when we look at a 5-minute candlestick chart. So it's the same indicators. We have a PMO and the RSI on it, as well as the OBV. So it's the same indicators on that 5-minute chart. I use minute charts only for entries and exits. I do not look at a minute chart to decide if I want the stock or not. That's just way too small, short a time frame. Now, of course, if you are a day trader, maybe you want to look at minute charts, but I would say that you need to look at least an hour chart, 2-hour chart, something to give you some basis and foundation for your analysis before you get to this 5-minute chart. You want to use that for your entries and exits only. The entries are, like I said, 5-minute candlesticks, and exits are also on a 5-minute candlestick. So what are the rules for entries and exits? When you use the 5-minute candle, the conservative entries are when the PMO has, the 5-minute PMO has a positive crossover and the RSI is positive. Pretty simple. It works pretty well. Sell points. Anytime the PMO turns down, that 5-minute PMO is a sell point. I don't need a positive, negative RSI. I just want to get out. And so what I'm looking for is the minute that momentum turns down. That is usually a good time to get out because you're going to see some follow through to the downside. So you're going to sell at a better point. Aggressive entries are based on price patterns, the PMO and RSI reactions, meaning if you want to get aggressive with it, you can look and say, hey, there's a double bottom on this 5-minute candle, Maybe that would be a good entry. The PMO is rising or just started to rise. It hasn't had the crossover. Maybe the RSI has been positive all day. There's gray area once you leave that conservative entries. And really the aggressive entries, the more you do it, you'll have a better idea as to whether it's a good idea or not to get aggressive on a stock. I would say that if your daily chart looks really good, getting aggressive on your entries and exits might not be a bad idea because you're really counting on that stock to do more just past a day. Here is that same stock that I was showing you the daily chart for. Here's kind of a double bottom on the chart. You can see that the entry would have occurred back here, the conservative entry, crossover, positive RSI. And that would have gotten you in right around here. When you wanted to exit, that is when the PMO turns over. You could have also exited back here where the PMO turned over, and that would have gotten you out up in this area. So as I said, you could certainly use this system for day trading. It's going to get you some extra percentages during the day, but it's excellent even if you're a longer term trader to use this just to give yourself a head start and make sure you're kind of getting yourself on the right path. So now that we've talked all about this, it's time to go look at your symbol requests. So go ahead and throw some in there. If I don't see any, I'll just sort of pick what I can and we'll go from there. Let me get to my charts here. There we go. Looks like you can see them. I can make them big. That's about as big as I can get, so hopefully that will work. Here is Amazon. Since I don't have any, I don't see any in the question box yet for symbol requests, but feel free, just throw in any one of them you want. I look at, like I said, I pick 10 stocks and ETFs per week. I have ETF day on Wednesday. So if you're not a stock trader and you prefer to trade ETFs, DecisionPoint Diamonds will fit the bill because you will get 3 ETF selections per week. And I do the work for you. So what can I say? And you'll see at the end, my price points are really low. Sometimes I come on these things and I'm a little embarrassed by how low my price points are, but really my main thing is to get you in, to get you learning what to do. I don't want to just give you the magic bullet. There is none. And, you know, I want you to learn as you go along. And, you know, I am a trader, but I feel that mostly I am a teacher, and that's what I want to do, is teach my subscribers to be better traders. And so I want you to be able to have that subscription and really get some use out of it. So here's Amazon. I still don't see any requests. My goodness, you guys are so quiet out there. Okay,
Hey, Erin,
yes.
I just want to point out, if you're looking in the control box, make sure you're in questions, not chat. That's where they'll roll into.
Okay. Yep, I don't see any yet. I think they're still from the prior ones. So I'll keep an eye out over there. And if you could too, that would be great.
Hey, scroll down. You got a bunch of them coming in. Alibaba, Comcast, IWM.
Woo, okay, now we're talking.
There you go.
GDXJ. Okay, that one caught my eye. I'm going to show you GDX because I have what we call under the hood indicators. I do various presentations and we have some really powerful indicators. One that is called the Silver Cross Index. This indicator is just, I can't even tell you how fantastic it is. We actually had a company approach us. They want to use it in their algorithms. We said, okay, and they're finding that it has improved their models by leaps and bounds. So the Silver Cross Index is turning out to be an amazing indicator. I'll tell you about it shortly. But here is, let's go down to GDX, because I actually have under the hood indicators for not only the major indexes here, but also all of the sectors and select industry groups, gold miners being one of them. So I think this will be really informative for GDXJ. I think they're very similar and it'll give you a good feel. So the first thing I know is everybody's looking for the rebound. We've got the pullback to support, and now it's everybody's salivating. I know I've been salivating. I want to get in on this one, but it is not the time to get in on this one. I think it is still a hold because we are holding support here, but I think it's not the time to get in. And why do I think that? RSI is positive, right? That should be okay. Well, my price momentum oscillator is on a sell signal and it is falling. But here's what really bothers me the most is the under the hood indicators. So I'm going to direct you to these 3 right here. These are probably the easiest to understand. So we measure how many stocks are above their 20-day EMA within gold miners in this case. So in gold miners, we have 42, 43% with price over their 20. Now, personally, I don't like to buy stocks that are below their 20. I really like to find those where they're above the 20, they're bouncing off the 20, which is kind of what GDX is trying to do here. Then we have the stocks above their 50 and the stocks above their 200-day EMAs. This is excellent information, and it can tell you that participation is dropping off for gold miners. We are losing the internal strength. we need to have strength under the surface in order for us to get a rebound. And what's happening? We're actually seeing participation bleeding off. Stochastics, they are in below 20, which is the worst place they could be, but they are trying to turn up, and they are our early warning indicator, if you will. They give us some great attention flags, but it's not even turned up yet. And relative strength obviously is petering off for gold miners. But here's the big one, the Silver Cross Index. So I'm going to start with the Golden Cross Index. Everybody is very familiar with what a Golden Cross is. That's when your 50-day EMA crosses above your 200-day EMA. So what we decided is when the 50 is above the 200, that means a stock is in a bull market configuration for that stock. So we wanted to measure how many stocks within that index sector industry group, how many of them have a 50-day over their 200? How many are actually configured bullishly? That's what the Golden Cross Index tells you. The Silver Cross Index is very similar, only we consider a Silver Cross a 20-50-day EMA crossover. And that tells you that either the stock is in a bull, not just necessarily a bull market configuration. It tells you that when the 20 gets above the 50, that in the intermediate and shorter terms, you have a nice bullish bias. So how many stocks have a bullish bias is what we want to know on the Silver Cross Index. How many stocks actually have a 20 above their 50? And that's what the Silver Cross Index measures. It's such a simple indicator. We are actually amazed that that this was something nobody else came up with. And like I said, we're finding it to be extraordinarily useful. So when the Silver Cross turns down, that's usually a sign that we're going to get a longer term decline or intermediate term decline. What we mark here are cardinal bottoms with green verticals and cardinal tops with red verticals. Cardinal meaning major direction changes. There's a bottom and there's a top. Notice that on these tops, the Silver Cross Index was pretty much right on. The negative crossover there pretty much gave us the signal that things were not as good as they may have looked up here. And so then we started to see things peter off. That's what's going on here on my Silver Cross Index. It does look like it paused a little bit. We'll have to see what happens after the close today. Maybe it'll turn up again, but ultimately it's on a negative crossover. And so I can't get in there and say gold miners are looking good. That was a long symbol request. I apologize. I will have time for far more. I'm just kind of looking through because I know I have some good charts here. IWM, let's look at IJR. That's the S&P 600, so it's pretty similar. I think I'm not going too far off the reservation here. IWM is great. It measures all the cats and dogs, as we like to call them. But the S&P 600 is a moderated list. We can actually do the Silver Cross, Golden Cross for it. So that's why I tend to concentrate more on the S&P 600 than I do on IWM. But you can see the same situations going on here. And in the case of IJR, the Silver Cross just yesterday had a negative crossover its signal line. And we call that a bear shift. It's a shift in direction, a shift in character for that particular stock, and in this case, this ETF. So that is a problem for me. There are a lot of problems going on. I will tell you straight up, I'm a big bear right now. If you follow me on Twitter, you'll know that I called this decline about 5-6 trading days ago. Our indicators were pretty much right on. The Silver Cross had topped, and it put us in a good situation knowing that the market would probably have a downturn. It would give us some information on maybe getting into an inverse ETF, which I did end up recommending yesterday to my diamond subscribers. Let's see, I gave them the real estate inverse for the real estate sector, which was REK. I told them they should short Jets, the airline ETF. And I also put in SDOW, which is an ultra short of the Dow. The Dow looks absolutely terrible right now, and I thought that would be a pretty good inverse. We'll see how it turns out. I also knew today would be a bounce, And I knew that because of our climactic indicators. We had a downside exhaustion climax. So I was looking for a bounce today or a pause, and that's what we're getting. But I have to tell you guys, I don't think this one, excuse me, I don't think this one's going to catch hold. I would say we're going to see more downside. I hope we don't test October lows, but I would not be at all surprised if we do. So that's how bearish I am right now. All right, so more about IGR. So this really just tells me right here that that's a problem. IWM, I'm sure, has a similar problem if we could calculate it. So certainly not a good place to be. All right, let's see what else is out there. Tesla seems to be a popular one. And TLT, I'll definitely look at that. So let's look at Tesla, because we need to do a little bit of trading here, don't we? I have to show you some 5-minute charts. All right. So Tesla is, you've got a big double top here. It's now confirmed that. Let me get my inspect tool out here so it'll be easier. So this was the confirmation line for that double top. It has confirmed that the minimum downside target, and I emphasize minimum, is the height of the pattern subtracted from the confirmation line. So we are not at the minimum downside target. And again, it's a minimum downside target. It doesn't mean that it'll stop there. But the height of this pattern tells me that we're going to probably see a decline that would test these tops, possibly these lows back from January. I'm not at all bullish here on Tesla. But let's go ahead and look at a 5-minute chart. Actually, let me make this a little wider. I think I can. There we go. All right. So the 5-minute here for Tesla, let's just do a few things here. So if you own that position and you felt bearish like I do, you'd want to know, well, when the heck should I sell it? That's when the 5-minute PMO turns over. So here's a sell point down here at about 155.25. We had another sell point come in here, and that came in at about 157.77. Currently, we're trading at 158.54, and the PMO is trying to turn up. So I would not be a seller at this point in time. What I would be watching for is the next PMO top. Now, you know that this price point is very similar to the price point of when we would have gotten out over here. So you could obviously make the choice that, well, I'm okay with, let's see, what's the difference here? I'm okay with a 0.3% decline here. So that would be a sell point right now. If you just wanted to go back to where the last sell point was, absolutely could do it. But let's say we were buyers back here. So here's where the PMO went positive. That would have been an aggressive entry. The conservative entry, we were on a buy signal, buy signal, buy signal. There's the RSI going positive. That would have been our buy point on a conservative basis. Our sell point, like I said, would have come in probably about the same place. So that particular buy signal probably didn't buy you a whole lot on the conservative side. But if you had got in on the crossover on the aggressive side, it still would have gotten you almost a percentage point. Not bad on an option trade. So those are some of the entries and exits. Here would have been the next entry would have been right here, PMO crossover, positive RSI. So that entry would have gotten you in at about 155.16. You could have sold it at this point, 55.16. And if you were a seller right now, you'd make 2% on the day. So not a bad system here. I find it's not perfect. If everything were perfect, I don't think we'd all be sitting here discussing this. So there are gray areas, but that's kind of the basics of getting in and getting out. But let's go to another symbol request, TLT. I'm going to show you this chart because it's already marked up. Like I said, in our DP alert, we cover all of these charts, not all at once, but these are the main things that we do cover. And TLT is absolutely one of them. So with TLT, we had actually been pretty bearish here on TLT. We've been expecting interest rates to continue rising, which means that would put downside pressure on TLT. That's what's happening currently. But if this decline that I think is coming up takes hold, bonds are going to see some action. Bonds and gold will likely see action because they're well-known safe havens. That's where people go when things get sticky and ugly, when the defensive sectors aren't even working for you. Tends to be where people will go. So at this point, because I am so bearish on the market, and I believe we will see bonds rise because of that. So at this point, when I look at the chart, though, I have to say we've got a bit of a problem here because that PMO is turning down beneath its signal line. The RSI has moved negative. Stochastics haven't completely topped, but they're getting ready to top. So if I didn't think what I do about the market, I would look at this and say, absolutely, this is going to test support, which I think it will do no matter what. Kind of head and shoulder-ish. So there's a good chance we're going to get that decline if the market doesn't do what I think it's going to do. If the market does what I think it's going to do, I don't think that we're going to have to worry about a big decline in bonds. For now, I would look for more consolidation until the market does what I expect it to do, which is move lower. So that is my look at TLT. Let's see, Apple, that's a famous one. I think most people want to see that. Similar situation. All right. So Apple, if I were to draw this in, and I'm going to just because I'm curious, rising bottoms. There we go. So at this point, Apple is actually in a nice rising trend channel. Yeah, it kind of went above that. So maybe in the shorter term, you could see it as a rising wedge, which is bearish. I would favor this. We're talking short-term trading. I would favor this over the other, which would mean a decline eventually, a breakdown of this rising bottoms trend line. This chart itself isn't looking that ugly, but it doesn't look like it's ready for a burst of speed to the upside, in my opinion. I think we'll probably test the top of this rising wedge, and that'll be about the time the market turns over, and then we're going to get that breakdown. And I would be looking for a breakdown to the 50 or 200-day EMAs. Stochastics are still unsure, so there might still be a little bit of internal strength left, which is why I would be looking for it to move up a little bit more and then follow the market or lead the market lower. But it is a good sign that Apple looks fairly healthy right now. That's good for the market because Apple tends to, mega cap wise, lead the indexes lower or higher. Right now, when we look at relative strength, the group is doing well in computer hardware. It's in a nice rising trend. So certainly looking better than the semiconductors right now. Apple has been doing great against the SPY, so it's definitely been holding leadership. And you can see that it is obviously a leader within its group, which doesn't surprise me. Like I said, it leads everything, being such a big mega cap. So my concern here is that we will see a breakdown. Now, if you're talking really short term, this does look bright enough to expect a move to the upside. Like I said, a tiny one, but I think we're going to ultimately see a breakdown here. If we were to look at that 5-minute chart, it's unfortunate I'm so bearish because I really want to help you buy stuff. And it's really hard for me to get in here and say buy. So you've got the last buy signal came in here, crossover, positive RSI. So you would have gotten in on this last bar right here. And if you had been even more aggressive and just gone on that PMO crossover, you'd have gotten in right about here. And when would the sell signal have occurred? Right back here. So up there, not a bad way to get out of that. Even in a day trade, that would have made you, even on the conservative side, probably would have gotten you about 1.3%, somewhere in there. So that would have been a pretty good move. All right, let's look at MGNX. All right, biotechs. Biotechs have been falling off the map relatively as far as relative strength. So I'm familiar with this because I held IBB and it was time to get rid of it. I believe my stop hit yesterday or today very, very quickly. So I know I'm not a fan of biotechs right now. So that's going to put some downside pressure on this stock just straight out the gate. But it isn't causing it a problem at this point. It's still showing relative strength against the S&P. And thankfully, it's showing a lot of relative strength against the group. So it's not one that I would say, no, no, no. The stochastics have just moved into positive territory above net neutral. RSI is already positive, and the PMO is now turning up. So this one looks very interesting to me. We have rising bottoms, kind of a flat top, and that is a ascending triangle. So what we would be looking for in this case would be an upside breakout. And it looks like we're on our way to that. If you go to the closing prices, it's actually having the breakout currently. So I'd have to say this stock looks pretty good. You're going to have a little issue when it gets to overhead resistance, which is about here, 9.5%. So that would still be a pretty good investment. I would be looking at a stop of about, well, that says 8.8%. That's where I'd really want to put it, is under the 200-day EMA. But that is a pretty hefty stop. That's really up to you. So I would probably be raising it closer to 7.5 toward these intraday lows. So that would be my stop level on this one. Now, let's see when would we want to get in on this one? Right about now. So right now you can see the 5-minute PMO is turning up. The RSI is positive. It's not a conservative entry yet, but this looks like a pretty good entry to me with the PMO, the 5-minute PMO turning up like it is on a positive RSI. You can also see the RSI has been positive all day, so that gives you also some confidence in a signal that would be just the turn on the PMO rather than the crossover. So I would say the buy point is occurring right about now. We'll see how that turns out more by the end of the day or even over the next day or two on trading, but that looks like your buy point right now. Okay, let us look at USO. Let's look at oil. This is also something we cover in our DP alert. So you're looking at the charts that our subscribers see. One of the things we do in the DP alert is we look at the same charts every day. And it sounds boring, but honestly, it's the best way to understand our indicators by seeing them and the changes they make every day. It gets you really good at understanding and reading our indicators because you see them every day. It makes us really good at reading our indicators because we see them every day. But seeing those small moves on those indicators every day really makes a difference and gets you a really good feeling about what's going on in the market in general. So that's why we look at the same USO charts. At the end of the week on Fridays, we do what we call a weekly wrap. So we look at not only the daily charts, but we also look at the weekly charts. And at the end of the month, we have a monthly wrap. We look at the monthly, the weekly, and daily charts in the same format as we do every day in the DP alert. So it's like a newspaper. It gives you all you need to know. If you don't have time to read about all those indicators, you can read our bias analysis, which is a paragraph. You can read our conclusion, which is a small paragraph. You read those, you've got all the news you really need, but you can go back and learn more by looking at the indicators and what we have to say about all of those. Now, back to USO, and I'm going to take a small sip of coffee here. Hold on. I could talk forever, so give me a mic and it's all over with. So we filled the gap on USO. You fill the gap typically means you're going to see follow through to the downside. I don't like what's going on with oil at all right now. I would say that $62 for USO is absolutely, I mean, I can't say absolutely going to happen, but really when you look at this chart, it tells me that more than likely that's what's going to happen. Now, if we get the turn before we have to tap the bottom of this trading range, that would be especially bullish and would tell me that we're going to get a rally. You can see that's what happened over here. It bottomed before it tapped the bottom of the trading range, and we did get a nice little rally out of it. That's kind of what I would be waiting for here. If it actually goes down and hits this level, I think we're really vulnerable to it to go all the way down to the 58 range. So I'm bearish on oil. I'm bearish on energy in general. If you're interested in an inverse ETF of energy, I found one called ERI, like the first part of my name. And that's a good way to play the inverse of energy, which I think right now is looking pretty good based on that PMO sell signal, stochastics falling. Really, nothing here is telling me we're going to get the rebound just yet. And currently, it looks like we have a filled black candlestick, which is a bearish formation, a bearish candle. If we look here, like I said, let's say you own it and you want to get rid of it, you're going to want to hold it. It's not the time to get rid of it. Why? Because the 5-minute PMO is rising. It is getting on the overbought side, so I'd have my finger on the trigger. I would imagine if I could see it get up to this level, I'd be happy enough to get rid of it there. But I would want to watch and make sure that PMO is starting to turn over or pausing. If, at this point, if it pauses and I really wanted to get out and that PMO just sort of flattened out and I knew that price was right around here, that would be my sell point. Like I said, there is a little bit of gray area, but ultimately just using the timing of these buy signals with the sell signals is usually going to get you some sort of return. All right. Tesla. She was looking at Tesla. Let me see if I didn't totally pay attention to Melissa's presentation on Tesla. But let's look at Tesla. So you can see the big gap down here. You can see that price is moving lower. We actually looked at Tesla. I apologize. We already did that one. Let's look. Well, you wanted to look at energy. Let's look at energy. I have under the hood for energy. There we go. Sorry, again, I know there's a lot of white space, but we have to, in order to be able to put these in our blogs, we have to have them a certain size, so I apologize. Rounded top. I was already not liking energy when we got this PMO top. It was already telling me there were some problems. Looked like we were getting what I call a PMO surge, where you get a bottom above the signal line right here. So I was feeling more bullish. But if you look down, the silver cross has now started to top. We don't have the crossover yet to the downside. I would imagine we'll see that today, especially if we do have a down day for energy. Golden Cross Index has a drop below the signal line, but this is the key. Participation has just fully dropped off the map here. You need some kind of participation in order to reverse a downtrend like this, and we don't have it. And stochastics are also below 20, so it's very internally weak. We can tell that right here. And like I said, this was the big one. The silver cross is topped and is getting ready for a negative crossover. That generally spells trouble. All right, let's see, 9:45. I've got to be coming now to the end, and I do not want to get into anybody else's presentation. So I'm going to quickly go over to back to my PowerPoint slides here. There we go. So to find me and to follow my trading, I do have a free trading room on Mondays. I know, something free. So here is a free trading room that I do on Mondays. It's actually produced by Stock Charts TV. So if you can't attend it live at noon Eastern, you can certainly go and see the prior episodes on the Stock Charts TV YouTube channel. So you can find all of my past trading rooms. If you want to go in there, test me, see how I did, whatever you want to do, just get a more of a feel for what we do on Mondays. You'll find that on the DecisionPoint channel on Stock Charts TV. All right. If you like what I was doing, if you like what I do on Mondays, those who subscribe to my DecisionPoint Diamonds, where I do give you those stock picks, we have a subscriber only Friday trading room. It is very small. So I get to all of the questions, I get to every symbol request, and I show you how to do those entries and exits. Like I said, I want to teach you to do this for yourself and maybe one day not need me. So that's kind of what I'm trying to do. So Fridays is a paid trading room for subscribers of the DecisionPoint Diamonds. So if you want to try us out, I haven't said the price point yet. I will show you my website in just 2 seconds. So if you want to save 50% off your first month, just go to checkout any of our subscriptions, whatever you want, and use the coupon code SAVE50. That'll get you 50% off your first month if you're ready to just dive right in. If you want to just test us out, you can do a 2-week trial for free. DP trial 2 at checkout for that one. But as I said, I need to show you my website or my person's going to be mad at me. My marketing person who's in the back of my head because I am the marketing person. Okay, here is my website, homepage. Sign up for my free newsletter right here. That way you can get on the list. You'll hear about the trading room. You'll hear when I do these presentations like I'm doing today. And if you want to subscribe, here we go. And as I said, my price points, I think at this point are embarrassingly low. But again, I want you to learn. I want you to get, I want people to learn what I do because I want them to do it for themselves. And so that's why our price points are so low. So if you want just the DP alert, it's 50 a month, 80 a month for diamonds, 10 picks from my scans. And then if you want to try both of them, which we think you really need both, as I said, big picture analysis, drilling down, it's 119 per month. But as I said, if you look back here and we look at the coupon codes, there you go. Save 50 for 50% off your first month and a 2-week trial if you want to use that instead. DP trial 2 will get you free 2 of mine. So now I'm done. I know I went a little over.
Hey, you know what? In a live event, I'm sure everybody understands, and we can run further and further behind. Somebody finishes a few minutes quicker. But
Yeah.
Erin, I want to say thank you for being here, the great information. I love the simple indicators you showed today, and I can definitely see how they improve entries and exits. Thank you for making so generous of an offer to our audience. Your insight of the market is incredible, truly gifted. And I just want to thank you so much for sharing everything you did today.
Oh, no problem. Thank you. I'm happy to come back.
Ladies